Welcome back. Well, an earlier rally seems to be disappearing. Futures are searching for direction right now. The Dow Industrial's up 3 points. The Nasdaq is up 17, and the S&P is higher by 2.25. This after stocks plunged yesterday. The Nasdaq now in correction territory, meaning it was down more than 10% in a period of time. It was down 2 2/3% yesterday, 483 points lower on the Nasdaq yesterday. The Dow was down 427. That was about 1%. All at 4 o'clock on Wall Street, we had declines across the board, even after President Trump granted a temporary tariff exemption for Canadian and Mexican goods covered by USMCA until April 2nd. The president told Fox News' Peter Doocy he's not worried about the stock market selling off. Watch this.
Why the markets are so spooked? Do you think they don't like the tariffs, or do they not like the uncertainty with some of the changes and the carve-outs?
A lot of them are globalist countries and companies that won't be doing as well because we're taking back things that have been taken from us many years ago. We've been treated very unfairly as a country. We protect everybody. We do everything for all these countries, and a lot of these are globalist in nature.
Joining me now is Making Money host Charles Payne. Charles, look, we know business wants clarity and predictability, but the president makes a good point. The people who are screaming about tariffs are those people who've got lots of operations overseas.
Yeah, and even operations here when it comes to things like those, right? The government and feeding at the trough, that's a very profitable endeavor. Unfortunately, it's been an unaccountable endeavor for a long time. And now we're talking about the American public who has to pay the weight of higher interest, $37 trillion in debt. And one thing that really bothers me a lot, Maria, is when the same people who said it was good for Joe Biden to pay the richest companies in the world billions of dollars to build factories here doesn't think it's good for President Trump to rejigger the balance so that those same factories built those, so those same companies come here and foot the bill and built them themselves, so that we make our own medicines here, so that we make our own steel here, so that we create jobs. For all the screaming about the consumer, before you can get a consumer, you need someone who has a job. Let's focus on bringing back employment. The worst offenders of this are the auto industry. I did something yesterday. I talked about the most American-made cars out there. Outside of Tesla, it's all foreign companies. How does Honda have more American-made cars than General Motors or Ford? When I hear the CEOs of Ford or General Motors whining about this sort of stuff, I say, I didn't hear a word from you when CAFE standards are artificially jacked up because ostensibly the goal was to make cars with combustion engines illegal, unaffordable. So all they did was make cars more expensive, vehicles more expensive, and by the way, less and more dangerous. I didn't hear a peep out of them. So, these crocodile tears, the most important thing I think for President Trump is to continue to own this, to continue to say this is not about us thinking like Wall Street thinks. Every 3 months, what are the quarterly earnings going to be?
Yeah,
wow, the
point.
Profit margins went from 25% to 24%. We've got to think long term. If we want to maintain the next 100 years as the preeminent country in the world, this has to be viewed as an investment.
That's a great point. And that's basically what President Trump said yesterday when I spoke with him about this, basically saying, OK, so we'll have some disruption. The stock market sells off for a little while. Longer term, you're talking about more investment in America, $2 trillion. He's been able to get big investors to come and invest in America. And longer term, we won't be reliant on our adversaries. I mean, can you imagine we are reliant on communist China for our prescription drugs?
It's nuts. I mean,
how about advanced semiconductor chips, Charles? 90% of the advanced semiconductor chips are made in Taiwan. We use those advanced semiconductor chips for everything: our phones, our military. What? That has to change. How's it going to change? They're not going to change it unless you have a leader who says, well, if you don't change it, you're going to pony up.
Right. It takes a leader who's not looking to be reelected. It takes a leader who's not looking to win short-term popularity contests. And that's why this is a unique period in time right now, a unique moment. And by the way, probably the last chance we'll have. And it's not just computer chips and those kind of things. It's like General Motors having to make respirators because we don't have respirators during COVID. It's those kind of things. I mean, just think about this. The guy from Ontario, he gets to threaten turning off power to America. Are you crazy? I mean, we've got more oil under our feet. They've got that thick tar sand stuff is expensive and all that stuff. We should never be threatened by any country in the world ever again for anything that we need, because we have the ability to produce it ourselves.
And the other day, we heard the foreign minister of China say, China is ready for war. We're ready for a trade war, a tariff war, or any other war that America wants. I mean, to me, that sounded like a veiled threat. But, like, if we're going to rely on these people who are telling us they're ready for war to make these important things that we need, imagine if China goes into Taiwan and takes over the 90% advanced semiconductor chip production, Charles. They'll be able to turn the world on and off, okay?
Yeah.
And the president is well aware of it. The Treasury Secretary is well aware of it. Scott Bessent speaking to the Economic Club of New York yesterday about America's imports. Watch this.
Access to cheap goods is not the essence of the American dream. The American dream is rooted in the concept that any citizen can achieve prosperity, upward mobility, and economic security. For too long, the designers of multilateral trade deals have lost sight of this. International economic relations that do not work for the American people must be re-examined.
What'd you think of the speech, Charles? Your reaction?
Absolutely loved it. I absolutely loved it. And he said it in a way that was so thoughtful, right? Much more thoughtful than I could have done, because, Maria, it's heartbreaking. And think about this. When Kissinger and Nixon went to China, I think the average annual salary was like $150. And then they had these same globalists who told us, hey, let's ship our manufacturing there, because these jobs aren't worthwhile. And now they're our #1 economic rival. You can't keep telling me that these jobs aren't worthwhile, and then we hollow out the middle of the nation. We create a drug crisis and a hopelessness crisis, and say that we want the status quo. What we have to understand is that there's a major difference between saying I'm for Americans as long as they're consumers, but I'm not for Americans if they want a piece of the pie. Corporate America's got to step up. And as far as the media is concerned, the same media that wanted to see Trump not even win the election, fanning the flames, that's on them. But I think they're doing a disservice to the American public.
Oh, what the left said about that 13-year-old boy the other day, I have no comment. I mean, it's just, I don't even want to go there. Let me ask you about interest rates. Yields this morning hovering around 4.2%. Federal Reserve Chairman Jay Powell speaking today in New York City. This is the final public remarks from the chairman before the central bank's next rate decision happening in 2 weeks' time. Fed governors Michelle Bowman and Adriana Kugler will be speaking as well. So we could get some news out of this, and it could be a market mover. Of course, first we'll get the February jobs report out in 10 minutes' time. 8:30 a.m. Eastern. This could be a market mover, Charles. 160,000 jobs expected in the last month. The unemployment rate holding steady at 4.0%. Pardon me. But look, this is going to be the report to watch, because we just saw a weaker than expected jobs report on Wednesday from ADP, Charles. Yeah,
that came in at half what the street thought it would. And I thought, more importantly, you saw a lot of pressure on the small end, the small business end. I think today manufacturing is going to be a key. You know, we've had some signs of a potential manufacturing renaissance. Service numbers have been weaker, but still in expansion. Obviously, I'm always looking for participation. We want to get people off the sofa. We want them looking for jobs. But it's a tough one, Maria. I think the work week is going to – here's what my theory on labor, and it's been my theory for about a year, that we're already in a labor crisis, and we don't see it on the front end. You won't see it on Thursday's initial jobless claims. You see it through attrition. People are leaving work and no one's being hired. And that's what ADP also backed up. Also, work hours are getting longer and wage growth is getting slower. That's where the labor crisis is going to show up, and that's where it's going to start to hurt us. And I think already the street's looking at 3 rate cuts this year. Maybe Powell says something that makes him think there could be even more. Between the jobs report and Powell's comments, we could even see even more, because that's going to be one of the things that pulls this market out of a tailspin. Yeah, but if you're expecting 3 rate cuts, then, look, if we get 3 rate cuts by the Fed, that means you're talking about a dire financial situation. You're talking about recession. 3 rate cuts, recession. Right now, with just 10% of the population buying 50% of the goods, and all of the so-called excess cash long gone from the bottom, 75% of this country, most people are already in a recession. Most people have been in a recession, and when they went to the polls in November, they were in a recession. So a lot of this stuff doesn't show up in the official data. Almost every economic data point that we use needs to be rejiggered and relooked at. The GDP number, why do we even talk about U3 when we should be looking at the U6 employment number? Almost everything that we use to measure our economy is so way off that there's a massive disconnect between Wall Street economists and Main Street, and that's why you get the things that we got in November.
All right, we'll see if Joe Biden's recession shows up.